Webcam. That's not good. You're all set. We'll go ahead and get started. So my name is Jared. This is Engineering the Markets. It is October 4th, 2021. And let's go ahead and take a walk around and see what last month provided. Let's talk about some basically moving forward approaches as we've had a pretty volatile September. We have a lot of back and forth price action between different risk factors in the market, along with our relative overextension of the overall S&P. So when looking at that high level overview, we'll kind of start from the longest time frame that we want to consider, and then just kind of shift down lower and lower until we find maybe some possible thesis ideas along with some potential scenarios. So starting off with the SPX, it's worth noting that we did have an engulfing bearish month inside of the SPX. We've been trending for a period of approximately 6 to 8 months. And depending on how you're looking at how the market likes to pivot, you can see that over those past 6 months, we've had subsequently higher highs, basically closing higher than the previous month, which leads to that sort of green looking trend that we had prior. Arguably, the market had the opportunity to pivot back in time, approximately February to March. And if you remember, back in February and March, this is a time frame where the NASDAQ was actually selling off quite hard, leading to some relative choppy or just weakness inside of tech. But of course, that resolved, and ultimately the market did trend higher for a period of 6 months. Now that we have this monthly perspective, we see that the market can ultimately pivot from this area. And essentially, because of the size of this range, we could also potentially use this as range definition. So we have an all-time high. We have, of course, the low of September. And as the market either recovers or decides to break this low, it can sort of give us confirmation to more downside, along with the idea that the market could range trade and essentially be in this area for a period of time before deciding a more concrete direction moving forward. So as we look at the weekly and just shift back into our normal moving average perspective, we see that the market also closed fairly weak last week. We did have a down week overall, but of course on Friday, sort of the first day of October, we did see a bit of a recovery bounce across the market. The NASDAQ, the SPY, IWM, and Dow all had respective up days, of which there was relative strength inside of things like the IWM and the Dow. It's worth noting that the SPX, of course, is still holding the 20 period moving average on the weekly, and this has been a fairly strong area of demand back in time, leading to this relatively impressive bull run and ultimately the trend that we've observed on the daily chart. And as we shift into our daily perspective, just looking back at the week that was, I wanted to call out the fact that we had marked the expected move for last week at approximately 75, I believe, or 78 points. Basically, the week prior, we opened the week and we had about a $75 to $78 expected move overall. Last week, of course, was more volatile than that. The market moved much more than those 75-ish points. And more notably, we actually opened Monday with sort of a flat indecision day near resistance. And then on Tuesday, we had a breach of our expected move. When you look at a shorter time frame, you can see that the market actually responded fairly well to this area, essentially indicating that downside risk was being perpetuated if we could not reclaim our expected move. And of course, we did see additional downside on Thursday as the market pushed away from this and gave us what is essentially a 2 sigma move on the week, basically doubling the expected movement overall that was defined at the beginning of the week. Now, as the market recovered on Friday, we of course have new expected moves for this week. We're looking at approximately, if we go back to our Analyze tab, look at Think Back, type in XPX, and simply look at a time frame that includes Friday's close, something like Saturday would be appropriate. You can see that on the October 8th series, we're looking at about a 90-point expected move for the week. Now, it's worth mentioning that even though that was defined based on the close of last week, how all the option information and data settled, and of course, this was a fairly important settlement because we had a quarterly series that was being rolled along with our weekly on October 1st. It's worth noting that the volatility did expand for this week. That's fairly common if you do have a breach of expected move on the prior week. And additionally, we're not seeing volatility contract significantly relative to things like the VIX. Now, if we shift into the actual SPX expected move, now that the market is starting to reopen, we can start to monitor this series throughout the week and see if it is either expanding or contracting. And especially as we test or maybe even not test the lower or upper bounds of the expected move, let's see what volatility sort of does in response. Does it keep expanding? And ultimately, do we see another volatility spike like we saw approximately 2 weeks prior? So we have an idea of what the market can do throughout this week with our 42.67 lower bound and our 44.47 upper bound. The idea being that if we see a breach of either of these ranges, the market can ultimately start to assess risk based on this breach. And with the highest probability being that we return to the expected move, if we do not do so in either direction, expect volatility to rise. Essentially, to the downside, we should see additional risk progression and hedging of larger market-making firms. And a breach to the upside would be a more technical breakout from our downtrend, but additionally, volatility and ultimately the acceleration of momentum can also rise if we do breach this upper range. So shifting back to our SPY and just looking at things like volume and maybe some key levels. It's important to note that with the SPY, we do have some nuance in regards to where the market was able to test and where the market was able to close. If we're looking at shorter time frames, something like a 1 hour, you can see that the past week gave us a couple of short opportunities. We, of course, had our volatile Evergrande and debt ceiling Monday, basically the large gap down in the market. We recovered from this low, but we came into a spot of resistance. Our downtrend has been forming inside of the daily, and this area acted as another spot to essentially hedge or potentially get short the market. You can see that as we started to breach this area, we saw another volatile drop. Of course, noting that there are some patterns here in the form of head and shoulders, basically just confirming the type of upper supply and the fact that the market is still in this downtrend. As we came down, you can also see some potential mid-range opportunities. Something like a bear flag is a very obvious pattern that a lot of traders take advantage of. And the idea is fairly simple. After a large move, if we come into an area of previous supply and demand, basically a balance zone, and the market does not respond accordingly, you can see additional downside both on the breach of this flag, along with the fact that the market simply distributed some of its inventory in this range, leading to additional downside. Now that, of course, came into a very key level, roughly the 430 to 427 area, and this, of course, was set on Monday. So markets were hesitant on Thursday, last week's Thursday, as opposed to 2 weeks ago Monday. And if we just shift into a very shorter time frame, we opened poor in terms of downside on Friday's session. But it's worth noting that during that volatile drop, we're seeing once again some of those similarities to previous drops in the market. The idea that most sessions that we've had have actually been gap up sessions, and those gap up sessions have been sold into. The idea that usually with a gap up, you do want to see continuation for strength. And if it gets sold into, that can lead to downside volatility. Thursday and Friday, or Thursday leading into Friday, was one of the first times in a while where we've seen a gap down and the market actually responded with a relatively poor low and a more bullish or short covering response. There are some technical setups here as well. The idea that pre-market highs, and once again, this sort of head and shoulder structure, was able to hold relatively well as the market pulled into it, tested it, and rallied, coming back into a very nuanced level in the SPY. This idea that we've marked this price level before with multiple daily tests. Market responded here on Friday's bounce. And ultimately, if we pull it back in just to a shorter time frame, we do have a VPOC down here. It's approximately 435. Ultimately, you need to look at shorter time frames to see this level, but basically 435 over the past 2 weeks has been the most fair price for the market to transact, hence why we have VPOC centered here. Now, all that said, we're looking at a market that has oscillated between a lower bound and an upper bound. And what we have right now is a bit of a potential bear trap. The idea being that momentum shorts who are expecting this low to break and potentially targeting the next swing low inside of the market did not get any follow through. And as the market responded back to VPOC, if we do see additional upside in this market, basically if we start to breach 435 to 436, we can start to evaluate this area as a possible breakdown that failed, a false breakdown. Some people call it things like springs, or basically just a trap, essentially a lack of follow through on a potential long or short setup. And oftentimes, depending on how it forms, you can target things like previous resistance, which we do have a downtrend, and also a relatively decent price level at approximately 443.50, along with the fact that this could ultimately define our range for the time being. We have our low, we have a low that failed to break lower, and so far we do want to confirm that this is holding as support, and an upper target can once again be something like VPOC, which we've already achieved, along with previous resistance. If we do get a full range transition, be wary that the market can respond with as big of a move as the entire range. Of course, looking for a breakout if it is going to be a bullish breakout and a change of trend on the downtrend. So overall, we do have some back and forth price action. Of course, shorts are technically still in control, but with Friday's price and with a new month, we can ultimately look for the potential for longs to recover and start to look for those bullish targets relative to the downtrend that has formed. Ultimately, if those targets are achieved, we can also look for the I'll say positioning of shorts. And once again, we're looking at resistance. We're trying to see if strong shorts are still in control. They're going to be advertising that control near resistance. Once again, doing the same evaluation on the NASDAQ with our downtrend, essentially, it's a little bit hard to say with regards to how the low has been set. Look at short time frames to get a sense of that. We do want to mark our high, and I would say ultimately we probably want to shift this a bit higher. Rough area overall. I'll say that this is more of a false breach here. But the NASDAQ, of course, has been where a lot of our risk has been contained in this market. Not only has most of the downside been in stronger tech names, larger market cap names, but we know that the bond dynamic is affecting tech stocks at this time. Bonds, of course, coming off very sharply, leading to a massive spike in interest rates. And as we've seen this start to settle, we're looking for either a reignition of shorts. Once again, back testing our range low. If bonds break down from here, expect more downside inside of tech. But if they do not, and if they come back into range, the idea here is that we could also have more of a recovery bounce, essentially pulling us back into an area of resistance. It's notable to look at something like a daily chart and just indicate or refer back in time to how the bond market responds to something like the 50 period. We have a lot of upper resistance on a stronger sell-off, and then of course the massive downside inside of bonds. If we are setting up something similar, ideally this can recover to this area and then find that additional weakness over time. So short term, we could see the bounce and of course the recovery of bonds leading to downside in interest rates and a tech recovery. But the risk is still assessed relative to what bonds are doing. And this, of course, is also going to affect other sectors that we know are sensitive to interest rates. It's worth noting that financials, one of our most sensitive sectors, actually finished the week a bit down. We had a red week last week. They, of course, are setting up well with the spike in interest rates, and as they are testing all-time highs, this, of course, can lead to a breakout. But for now, last week was so volatile in regards to a lot of sector weakness. Financials actually were not necessarily bullish. If we just look at an overview, we can actually see that from last week, our only bullish sector overall was energy. And of course, with energy's market cap weighting in the SPY, this is not enough to lead to a bullish response from a breadth perspective. Basically, if we're trying to be bullish, we need to be responding well to support bounces and looking for better market breadth. Energy is not enough. We need some sort of recovery either in tech, a potential recovery in healthcare, which we'll take a look at in just a second, or some sort of blend in regards to smaller sectors leading to relative performance. Something like communications would be ideal, as it does hold some of those bigger names like Facebook and Google. But with financials slightly down, energy up, and the rest very much down, it simply wasn't enough for a strong week in the market. Shifting over to healthcare very briefly, It's worth noting that healthcare has had one of the larger drawdowns inside of the past 2 weeks of selling. Healthcare had actually been selling off for a period of time prior. We saw the same pullback to the 50 as the overall S&P. But during Monday's drop and the recovery bounce setting up the downtrend overall in the market, healthcare actually saw a lot of additional downside from last week's activity. What's interesting is, of course, Friday's session. As we are coming down, we're looking back in time and seeing that this is a previous range. And as we are testing the top side of this range, we're seeing a bit of a response here. Higher volume, possible capitulation in regards to the selling may simply need to rest. And once again, same idea here. We need to be essentially hesitant or objective as technical bulls, looking for risk to reward opportunities. If healthcare is to respond bullish from this price level, a target for now is still going to be the downtrend. And ultimately, this range can set up over time. But the idea is that even with a strong recovery bounce from a technical area, healthcare, once again, has been a weak sector overall. So we can't necessarily look at this as a full recovery bounce, more of just a good risk to reward area to consider. And there's a few stocks that maybe give us that hint. We look at Pfizer. Pfizer has a technical area, both in this swing high, and as we extend this out, this is a previous supply zone, basically a buying climax that led to additional downside and retesting of the lows. So as Pfizer's coming into this area, same response and same change in volume based on Friday's activity. We're also seeing that high volatility inside of stocks like mRNA. When we look at the healthcare sector, I'll just switch over to the Analyze tab. There are a few names here that stand out. And when we look at Pfizer, we see that this market cap weighting is relatively high. The likes of UNH and J&J are going to be more important, but some of this downside and the recovery of healthcare may be dictated by some of the oversold conditions of these stocks. Along with UNH, once again, large component of the Dow, coming into the 200 and responding accordingly. J&J been selling off for quite a while, looking for this one maybe to at least hold, if not to respond bullish with the rest of the healthcare sector. So forming a thesis into this week, what we're looking for is either our bullish response to be supported by some recovery of market breadth. Once again, bringing up RSP, the equal weighted ETF. Idea here is that this is also in a relative downtrend. So if we see breadth starting to recover, maybe a bullish breakout in this ETF, then we can start to see maybe some sectors holding better than others. Even if tech is selling, or even if tech is not performing well, healthcare can alleviate some of the downside selling pressure. We also know that financials are still relatively bullish. It's worth noting that during the volatility of 2 week prior Monday, the financial response from this low was a full 100% retracement. We came back to our high point, and now we've pulled back to our 50 and 20 on the daily. Once again, if the response Friday is to be trusted, we would like to see financials hold here, and potentially bonds, if they do continue to sell, the interest rate spike may assist with a financial breakout. Same idea with energy. Want to note that anchoring from that Monday gap down and seeing what these sectors do after the fact, energy has been the outperformer. And it's worth noting that those signals were present as soon as that Monday drop occurred. We're seeing crude and natural gas continue to be relatively strong commodity assets. And even with the dollar breakout, which we looked at last week, these sectors are outperforming, and the energy ETF is setting up with a possible bull flag. We're seeing a retest of the previous high. So it just shows the type of relative strength in some of these sectors versus something like an oversold bounce. If they all line up at the same time, and potentially with tech maybe not giving us the same downside as last week, we could see a market recovery. The SPY could actually bounce pretty significantly from these areas. But if any of this starts to fall apart, or if there's not enough breadth in regards to a bullish response, expect either more downside or additional back and forth price action, noting things like VPOC, roughly 435 on the SPY, along with our sort of back and forth sector rotation that we're seeing with the change in interest rates. Obviously, our dollar still a big risk factor. I've gone ahead and drawn out the previous two swing highs, just noting that we are seeing a pullback response from this area. This is likely going to be maybe some technical consideration for the dollar. And it's a bit of an odd pattern to discuss because we do have sort of range expansion occurring throughout this area. You can see that the volatility expands as we get responses from low to high. But if we are going to see a repeat of last pattern, then this test could possibly lead to downside to this area, basically where the dollar has responded before. So once again, if the dollar starts to roll back, and ideally if the dollar can close below where we broke out from, that can signal some possible bullishness in commodities, equities, and even things like the crypto space, which if you've been tracking the past couple of days, we've actually seen a bit of a breakout in Bitcoin, Ethereum, and pretty much a lot of altcoins that are highly correlated to the overall just the breakout response that we saw. So all this put together, we have our bullish thesis. Our bearish thesis continues to be if we start to see breaches of that relative low, or essentially a move away from VPOC. You know, if strong selling pressure is to occur, we need to see it either at value or at resistance. And what we're doing right now in the market is essentially testing those areas on a false breakdown of the SPY. Another thing, you know, to kind of watch is volatility. We've seen this massive sort of volatility spike, and while we did make a new low in the SPY, it's still technically sort of a trap and a poor low. Volatility did not necessarily retest this area. So we have sort of the same low in the SPY, but a lower low in the VIX. So once again, just kind of seeing if this starts to decrease, and ultimately if we get a bigger roll off of volatility, that can lead to a larger relief rally in the SPY, basically a recovery of some of the selling. So with that said, I think that's pretty much it, and that's all the time that I have for now. A lot of information just kind of packed into what we normally analyze and what we normally want to assess. But keep in mind, a lot of these technical and I would say correlated analyses are painting a picture for what we can anticipate next week or this week. We have our expected move about 90 points up or down from the close of last Friday. We have some risk factors, but we also have some possible bullish thesis ideas if these risk factors start to roll off. Also keep very close watch on things like healthcare, tech, and I would say some of the more inflationary sensitive sectors like financials and energy. I'd also be watching industrials. There's a lot of discussion about the infrastructure bill. There's a lot of sort of built-in energy in regards to a stronger commodity market leading to bullishness in industrials and materials. And these two sectors have not been the same, I would say, bullish or relative strength as energy. So something to watch as a possible rotation of money. And if we do see the bullish response, these might respond in kind. So with that said, let's go into this week with that open thesis and open mind. Trade safe and stay tuned for pre-market prep.
All right. Good morning, everyone. Welcome to Pre-Market Prep. I hope everyone is having an amazing morning. Hope you had a great weekend. Good morning, Norm. How are you doing today?
Hey, good morning, buddy. I'm doing well. How are you?
Doing good, man. Doing real good. So hopefully you guys enjoyed your weekend with families and friends. Let's get to another week of trading, guys. Take a quick look at our gappers list this morning, and not too bad. A lot of very familiar tickers we have on here. But for the most part, not a crazy gap up or down list this morning. So that's good. Always good to see that. Before we get to that, Norm, what is the latest and greatest on the SPY and the overall market for today and this week?
Well, Jared just talked us through it, so I won't rehash it completely. I will say, though, however, we should start. Trading in September was kind of a lot of days. We
Yeah.
should start getting into a more consistent, decent trading market one way or the other here soon, now that it's October. So,
Yeah, we definitely saw a lot of rough days. So hopefully things will get better, especially for us day traders here. All right, guys, let's hop onto it, guys. Let's look at what we have here, starting with XENE. So this one this morning, it is up 81%. That is a huge pop right now. 3 million shares traded. Let's take a look here at the daily. Yes, a nice pop today. I'm missing something here. Yes, I'm missing my float information. Let's get that up here. Here we go.
it's right at 37 million.
All right, so 37. Yeah. So, any news on this, Norm? Pretty big pop for today.
Yeah, they had some positive results out of a phase 2 trial.
Okay,
I believe
so that's definitely causing
a type of epilepsy, I believe. So,
yeah. All right, so we'll put this on here, guys. Again, the pop is great. We'll have to see how this thing is going to trade. Usually these are could be really nice moves, but they can be extremely volatile and choppy. Not a low. It's not a low flow stock, guys. It's sitting at 37. But the reason I'm putting it down here is definitely on the riskier side. Just look at some of the candle movements on here. They're $1 easily, right? So look at this candle here. This is 30.20, right? This one opens up at 30.20. Closes well, not more than $1. This is about 50 cents or so. This is a 1 minute. The 5 minutes definitely going to be $1 plus here. So you got to be very careful on a move like that. So if we look at our 5 minute here, you can see again it's moving very aggressively. So I'm going to put it down here just to be aware that you don't want to be taking a full size on your hotkey on this one. You want to definitely calculate the risk a little bit closer. GM this morning, they're up 4%, 3.4% exactly, 984,000 shares traded. Daily looks very active. They must have some news because, again, these guys, they barely move, right? General Motors, huge float, guys, 1.3 billion, right? Not typically the best intraday trading stock as well. Anything on these guys, Storm?
yeah, they've got a company that's coming and invested in them. It kind of going toward the electric vehicle stuff. So they were on at CNBC this morning talking about it.
Okay. We'll put them on here, guys. Again, they're very active today. Almost 1 million shares trading. They're actually moving pretty good in the pre-market for that 1 million. So we'll put GM on here. MRK, this was wild yesterday. Not yesterday, Friday. Oh man, Harry, you are.
Thank you, Harry.
The man. Harry coming in with his usual $5 bomb here. Good morning, fellas. Hope you all had a great weekend and hope everyone in BBT community start the month off a week strong. Start the month and the week off strong. So thank you for that, Harry. Very, very much. Appreciate your continuous support here for the community, for the charities of the month, which this month we're doing
National Breast Cancer Foundation.
National Breast Cancer, right? Yep. And it was I was driving by the Turnpike, and you could see that New York City, on October 1st, if you guys live in the city, they had the Empire State Building all in pink for that, and the bridges were all in pink as well. It's pretty nice to see all of that. So yeah, thank you so much. Going for an amazing cause, guys. Every dollar for dollar we match by Andrew. So if you have the opportunity to donate, please do so. If you cannot, we also appreciate some thumbs up. That's also a way to support our channel. So appreciate that very much.
Yep.
All right, let's get to it. MRK, guys, very active. This was wild last week. This thing popped up nicely. Looks like it is still very strong this morning, up 4%, 2 million shares traded. I'm going to put this one on here, guys, MRK. Next, we looked at GM. We got some shifting here. BTU is popping up here. BTU is up 106. And we're not talking about air conditioners, power. We're talking about Peabody Energy Corporation. So not sure what's going on with these guys today, but their overall volume on the daily, not great. I don't know, maybe a possible. Volume is very light right now. I do like the potential on it. Is the news good or?
It's a coal mining business, so
that's what this is. Okay, it's not gonna trade well.
I hesitate to even.
I'm gonna take it off. And again, if you're wondering why, yes, the numbers look decent. There's some potential here. They just don't trade very well, guys, for intraday. Last one on the list.
Maybe it's different. It looks like it had a decent day or two back then, but like last week. But I'd rather pick it up on scanners if it does anything too exciting.
Yeah. I agree. I'd rather save that spot for something else. And great thing about our community, if somebody else has a spot, they can watch this, they'll call it out. But the scanners do an amazing job, guys. If this thing is going to go, it's going to hit our scanners, and we'll take up an opportunity there. Here is Tesla this morning. They are, that's a good pre-market action so far. 3% of this morning in 900,000 shares trade. That's looking very good. Love the pre-market action, guys. Started looking good even very early on with barely any volume. You can see this nice movement we got going on here. Volume starting to come in after 7 a.m. and you can see how it's getting even better. So like that here, breaking out of this previous high around 800. That's not our all-time highs though with Tesla, is it? I don't believe it is. No, we hit as high as 9 something there. So, but we're breaking out the most recent highs over here. So that's good. We've been talking about this thing, right? Kind of trading into a point here with a nice base. It was doing higher lows, so it was going to break out one way or the other. Today, we're seeing that breakout. Like what's happening on Tesla, definitely on our list this morning.
They reported their deliveries for September. So that's popping.
I love how when it gets to like a technical level, news comes out.
It's amazing how that works.
It just seems to happen that way. Why can't it just happen just because technicals, right? But it's just amazing how that works. So nice little pop here, guys, this morning. We'll definitely like Tesla today. Great volume as well. The series gapping down, not doing so well today. NVAX, they are down 5.7, 127,000. Again, you guys know how I feel about this stock. I personally do not like trading this one. The price action is a little bit funky. I like more volume and more a cleaner order flow. Now, these guys been moving a hell of a ton the last couple of days, guys. Look at the moves, 250 to 230, 230 to 205. I mean, this thing has been cranking. So if you're able to read the price action nicely on this one, it's definitely in play for you. Add it to your list. I just really do not like the way this thing moves, and it moves. Look at Friday. Look at this beautiful breakdown here that it had. If you're able to read the price action, looks like a nice open range 5 minute here. Beautiful pullback. Go for it. I'm gonna skip on it.
Controlling risk on that with that like $15 drop. Yeah. It's just I remember when these were super in play. This time last year, or from summer of last year, and this was the wildest trading of the bunch.
Yeah,
it was just nuts.
Yeah, that's true. That's very true. This was one that you had to really buckle your seats down. Yeah. I'm gonna stay away from it, guys. I hope we can find something better this morning. If not, we'll stick with our 3-4 stocks. This is perfectly okay to start the week on a Monday. mRNA is on deck. If I'm going to watch these ones, mRNA is definitely one to watch. Right now, they're down 5.1. I think this one I'm definitely going to have on deck. It trades a whole lot cleaner than NVAX does for sure. A little less volume, but they're down. They're definitely in play this morning. Jared touched on these earlier in the Engineering the Market show as well.
Stuff.
Yep. PALT this morning. This is the low flow that was crazy a couple of days ago. I think the fun is over on this already, guys. I mean, if you're touching this, you're fishing, or maybe you're stuck up here and trying to. Hopefully, that comes back up. But I know that's not BBT members because we don't do that type of stuff. We don't bag hold losers for something like this, especially on low flow stocks. And if you're there sitting in and that's hitting you, man, I hope you find a strategy to get out of that or do the best you can. But it's just. Third, fourth day is just horrible. ATER this morning, they're down 2.5, 184,000. Again, just doesn't look really in play or good at all this morning. And going back to this one, guys, not one to make anyone feel bad, but just you got to learn from it. If you made a mistake and you held on to one of these and you bag held, make sure that at the end, no matter what happens, whether you hold on to it and it comes back up because it can happen, or whether you decide to bite and take a loss, just make sure you learn from it, right? That's the biggest thing. Learn from it so it doesn't happen again. You can avoid that type of situation. So that's the most important thing. So if you ask any of the moderators for advice, hey, I'm holding this stock, I'm down $3,000. We're not going to tell you what to do. So don't waste your email sending it to us saying, should I buy or sell? Because we get those and it happens. What we're going to tell you is at the end of the day, just learn from it. We're not going to tell you to sell it, because if we tell you to sell it, it's going to come back up the next day. You're going to hate us. If we tell you to hold on to it, it's going to drop further and you're going to hate us anyway. So it's a hey situation for us. We can't help you with that.
We don't give advice. That's for sure.
Exactly. So anything we tell you is learn from it. Make sure you learn from it. All right, guys, that's what we have on our list. Norm, anything you like on your end?
No.
Yeah, it's very slim today, the pickings. I agree.
I want to see what the market does this week in the next couple of days. I'll tell you, it's just go to the room, see if we can find anything. I've been digging this morning. I haven't really found anything, so.
Agree. Looking at the SPY, pretty much flat right now. Not a whole lot going on. Trying to get into the green, looks like. We'll see if we can do that. Let's start with Marcus. Actually, Fiverr is giving us a ton here. CCL, American Airlines, Oxy, and Apple. Those are pretty good ones. We'll take a look at them quickly. CCL, again, travel company's been very active over the last couple of days. We've seen some pretty good move on them. CCL is one you can watch as a possible. Same thing with American Airlines. I mean, it all depends. The pre-market could look good and it could do well, or it could do horrible. The pre-market could look bad and the open could do well. It's such a hit and miss. And looking at their action right now, they don't look all that good. CCL maybe on the daily. You know what? I'm gonna wait for these to hit the scanners, guys. I'm gonna wait for that to happen. I think I agree with you, Fabio. There are definitely stocks to watch, especially with the news coming out with the vaccines and everything else. There are definitely stocks to watch. I just don't think they're really in play. Oxy, I love the daily here for possible breakout and continuation. They have the volume. They're not gapping up as much. They're pretty much flat right now. About to be up 1% shortly here. Could be interesting as a possible. I'd rather watch this one than American Airlines and CCL for today. Let's take a look at Apple. Apple's always a good one to keep an eye on. This morning, they are down slightly, looking to get into the green, 839. They might just be moving with the market, though. I don't think they have their own catalyst at the moment. So we'll put Apple on here. It's a good indicator for kind of the tech companies and things like that. And actually, the overall market, really, at times. Apple has a good pulse of what's going on. Here's Oxy. We looked at Oxy. Oxy is good. Thank you, Marcus. Yeah, I think Oxy is looking nice on the daily. Yeah, possible breakout. And I might move this up. I think there's some other stuff here that doesn't look as great that Oxy might be getting even a better action on. Here's Baba. They're down 2.1. I just don't think their pre-market action looks great right now. They do have great volume. It's very choppy. They do have great volume, right? 445 for Baba is pretty good in the pre-market. I just think they need a better activity right now. So
maybe it comes alive.
Yeah, actually, no, it might be a good possible because we did lose this 144 right on there. Mm-hmm. We held it here. We lost it now. Maybe, but I agree with you. It could end up being choppy because it's down now. Does it want to go lower? Is it going to bounce here? We'll have to see. It's just possible for now. Wish pushing some good volume around. I don't like the pre-market action on it, but it is pushing 2 million shares traded on it. It's funny, the lower the price gets, I feel the worse it trades on the intraday. So I'm not a big fan of this volume, although it looks great. Again, it's just the pre-market action is not really trading all that nice. I'm gonna skip on it, Myro, but if you're watching it, throw it back out if something looks really good there. But I'm gonna skip on it for now. Here is Facebook. I think Facebook is another one that's not really in play at the moment. We just have to.
They might come alive. They had that 60 Minutes piece last night where the woman the woman that gave all the documents to the Wall Street Journal that just slammed them a couple of weeks ago. She was on 60 Minutes last night, so that might come alive. I mean, it's not right now. It might be something to just keep in the back of your mind in case it comes out, but.
Yeah, we might not see something
not primary list for sure. It doesn't have the pre-market going right now, but maybe it picks up.
Yeah, that might pick up at the market open. We'll see how that's going to affect things. That show is very popular. I didn't watch it, but we'll see how that has an effect on it. You'd be surprised. Here is Tesla. We have Tesla already. It's looking actually very good, guys. Great pre-market action on Tesla this morning. Love what's happening there. BA, I actually like BA better than some of the other travel type airline companies, right? Not really manufacturing, but this one looks pretty good. Well, down quite a bit here now, almost up almost 1%, trying to get there. It's got some good movement. Volume is light though, 81,000. That can change. I'm gonna put them just as a possible now. I do like their daily as well. We've kind of been chopping around here, hopefully trying to break out of there. That could be interesting. Baba is good. We have it as a possible. I think there's some potential in there. CCL, I'm not gonna ask CCL today or American Airlines, guys. I'm gonna keep those off for now. Can they move? Yes. I just don't want to tie up my list with these two. Although American Airlines is starting to, could be nice. Their daily both look decent. I'm gonna wait for scanners, and I know Thor is gonna be watching these two. I want to put like $50 on that. If anyone wants to bet, Thor will be watching these two, and he's gonna call them out. Here we go. So I'll wait for Thor or the chat room or the scanners. Right? We got 3 ways to make sure we pump on CCL and American Airlines if they are going to be in play. I just don't see anything great right now. IMAX movie theaters. What is this? What is IMAX?
Worthless.
IMAX.
Got no volume.
Yeah, no, this looks horrible. I'm trying to think of companies. Yeah, this is a no. I mean, 3,700 guys. This is not good. Yes, the daily has been
spread
crushing it here.
Spread.
What's the spread on this? No. We don't want nothing to do with this, guys. You almost got almost a 75-cent spread there, and you probably do. You probably do because think about it. It's 100 shares, 200, 300 shares. I drop an order in right now. I'll take this out, and your next bid is at 823.
$17.90.
Oh well, yeah, that's right. This could be 2 shares, right? So it's $17.90. No good. We don't want to be dealing with that. All right. Anything else, guys? I lost my spot, so I'll continue here with Gary with AMC, and we'll look at space next. AMC, yeah, we got some volume. Why is not in our gappers list? It should be on here. Oh, it's not 2% yet. Yeah, it's gonna be good though. I could tell that it's gonna get up there. It's moving 700,000. We'll put it on there. AMC could be very nice. Space this morning. Let's take a look at that one. No, it looks very choppy, guys. It looks very, very choppy right now. Not great volume on space. It has some fun over the last 2 days, Thursday and Friday. I'm not sure if today if they're cutting it right now. AFR at A firm. I don't like the way this one trades, so I won't add it to my list. If you do like it, put it on there. I don't see anything great on it right now though. So again, I'm not a fan of the way it looks at the moment. So I won't be adding that. All right, more AMC. We do have that one on deck, so we're good there. Let's hop over. Mao, you gave us LSIT. We'll look at LSIT, and we'll take a look over at YouTube, see what's happening there. LSIT, Lucid, however you want to call this one. They got volume. Their daily is very interesting, though. I gotta say, they're holding on to his previous day close line, sitting at 24.61. Right on here, so you see the support you're getting there. That is interesting. We do have shares for sure. The pre-market action right now is not interesting. It's just pushing volume around. It's just kind of really moving sideways. This is one you have to wait for the market open to see if it's going to have any type of direction. So we'll have to see what goes on there. I won't add that one to my list right now. BA we do have as a possible, guys. That's good. And yes, I agree. LSIT could be brutal. You got to be very careful. The pullbacks on this thing and the price action is not fluid. It's not a good price action. The order flow is very, very funky. Yeah, I'm not adding that one to my list. Let's go over to YouTube, see what we have going on this morning. AMC we do have. Sunny, thank you for that. OPGN. If it's already on this list, we're going to go over in more detail, so don't throw it back out. We'll definitely take a look at those. Here, OPGN this morning. I don't like these lower price stock with this much volume. With 10 million shares traded, you're trading at $3 and you're moving like this. It just never turns out good for me. The few times I have tried stocks like this, it just doesn't work out. Not a low flow, 38 million. I actually thought it was going to be even a higher flow because usually you see this type of stuff with floats that are in mid to large. I'm just not a fan of this one at all. So just be careful if you're going to be trading this. The price action is definitely a little bit different. Baba, we do have already, so that's good. Thank you, Colton. Matthew, you're giving us TPR this morning and GPS. No. This is a huge block trade.
Block trade. All but 1,000 shares. That's a block trade.
Yeah, so that's no good. And then GPS, unless they're in play, man, unless they got some news, they're not going to be good neither. No volume whatsoever. So they're not in play. American Airlines, yeah, we looked at that already. AMC, we do have. AFirm, we looked at. Okay, good. We're doing good here. AMD, Sakari, giving us AMD this morning. Let's take a look. Just moving with the market. I have Apple for that. I don't see anything here that's different or crazy on this. NEO was good last week. Friday we had a great pre-market action on NEO and actually traded very decent, guys. I don't see that happening this morning. Volume is very light. It's not gapping up or down at all. So we'll skip on that one. JSPR today. What do we have here? JSPR. They got some movement. They're up 23%. Funky daily. I mean, this daily is very funky. Yeah, I'm not sure about this. I don't think have we ever looked at this before? I don't think we have. Yeah, I'm not sure what to think about this.
I don't recall that.
Yeah, I don't recall looking at this. And we don't have flow information on here, at least not yet. Is it a SPAC maybe just coming out? It looks like a SPAC. I'm gonna skip on this for now.
Yes, it's recently de-SPAC'd.
Oh yeah. We'll leave that alone. X, I don't see it in play, guys. Light volume right now. Oxy, we looked at and keep up. I'm not gonna look at those. So I'll pick one. I'll pick your first one, CIE, which we actually do not like this one. Sitting on the American Stock Exchange. Again, another one of these lower price stocks that gets tons of volume. 7 million shares traded. And it's just the price action doesn't move good for me. I just don't like the way this dances. So I'm not gonna get on the dance floor with that one. Norm, let's go over to our community events and announcements. We'll come back and fine tune this list, guys. We got a few on there that look all right.
All right, guys. Quick weekly rundown. Monday afternoons, you've got Brian's swing discussion at 2:30 Eastern. He's been in the room a lot more than that, talking about swing trades and such recently. But that is his scheduled time. And then you've got onboarding and technology at 8 and 9 p.m. with Carlos and Kyle on Monday nights live. Then Tuesdays, Tuesday and Thursday, you've got trade reviews with Eamon in the classroom, success webinars 8 p.m. on Tuesday, psychology webinars 8 p.m. on Wednesday, mentoring with Andrew 11 a.m. on Thursday, and Thor 8 p.m. on Thursday. And then Friday, of course, you've got Jared's crypto mentorship at 11 a.m. All right. Tomorrow night, 8 p.m. Eastern, you've got Peter and Jared talking about demystifying market cycles. And then next week, you're going to have part 2 of Kyle's webinar. I apologize, guys. Last week, there was some confusion about this hotkeys for risk management, part 1, part 2. So the real part 2 is next Tuesday, 8 p.m. Eastern. All right. For psychology this week, you're going to have Dr. Kenneth Reed discussing 7 consistency killers. That's 8 p.m. Wednesday. And then next week, our very own Creda is going to be talking about money mindset, overcoming your money mindset blocks. That's at 5 p.m. Eastern because of her time zone. So keep that in mind next Wednesday. All right, the BBT charity, BBT Family Charity of the Month. All right, guys, we have switched the calendar. I will have totals for what we did in September a little bit later this week. It takes a couple of days for those to finalize from YouTube. But this month, in honor of all the wonderful women we have in BBT, we will be donating to the National Breast Cancer Foundation. That's matched dollar for dollar by Andrew and awarded that at the end of the month. If you want to participate in the member trade of the day, trade of the week, take a screenshot of your best trade of the day, post it on Twitter, tag at Bearable Traders, at MikeB_BBT, and at NormBBT. Also use hashtags BBT Family, Day Trading, and Stock Market. Please be sure to put as much commentary as you can on that, and we'll announce the winner every afternoon in the for trade of the day and Twitter and in the room, and then all the trades of the day are eligible for trade of the week, which is voted on by the team over the weekend and announced on Monday. All right. If you're watching on YouTube, haven't been in the chat, you can go to the homepage. That's bearabletraders.com. Scroll down the page. You'll see that test drive button. Click that. Apply the promo code PREMARKET24. It'll get you a discount off the intro membership and access to the room for 7 calendar days, 5 trading days. Does not bill you again unless you choose another membership option. And also gives you access to those Monday night onboarding classes I was just discussing. And speaking of other membership options, you can use the promo code FALL40 to get 40% off the annual Elite membership. Creda, can you hear me?
Hi, I can.
Hey,
can you
there
hear
you
me
go.
okay?
Yes, loud and clear. How are you? Welcome. So we wrapped up. We've been doing this segment for a while. Of course, we had Dr. Katz doing it, but everybody was super excited to hear they're going to actually get a double dose of you on Mondays and Wednesdays. So welcome. We're super excited to have you.
Thanks a lot. Delighted to be here. I actually just came from meeting Andrew in Lisbon on the beach for a coffee, so perfect timing to start off.
Yeah, exactly. It's crazy. What great timing. And you're going to start off. So we'll tweak things and improve things from what they were. It won't be exactly the same, but we'll stick kind of along the same lines. And you're going to be talking in October about performing under pressure, correct?
Yeah, exactly. Yeah. So we're going to explore that over the next couple of Mondays. Cool.
Sounds
so
good.
just
take it away.
Thanks. So in case anyone isn't familiar with me, doesn't know who I am or why I'm talking to you about trading psychology, I'm a sports psychologist, high performance psychologist, spent most of my career in sport, and now I'm applying the learnings and the science of high performance psychology in the trading context. So today we're going to talk about performing under pressure. And really, this is most noticeable in trading. If you see a difference between how you trade when you're trading on sim and your results when you're trading on sim, and then a difference when you're trading live, usually the culprit is that when you're actually trading live, you feel under more pressure. And so that can change how you trade. It can change, how you stick to your rules, to your plan. And obviously it can really have an impact on your P&L. So what I just want to discuss today, give an overview of, is how pressure actually impacts our thinking. So it's really important to understand what pressure can do to our decision making, because obviously that has a huge impact on what you're doing while you're in a trade. So a couple of different ways that pressure can actually impact your thinking. And the first one is that it can cause you to second guess what you already know, what's already automatic for you. And it can make you overthink everything that you're doing. So overthink your whole strategy. And that often people refer to that as paralysis by analysis. And you see that in sport a lot, where people, can perform really well in training. They can perform excellently even in low stakes matches, but when it gets to a championship, their performance goes to pieces. And what's happening is that they're starting to actually consciously think of all the different skills that they need to use in order to perform well, and that decimates performance. So it's the same in trading. If you find that there's a difference in your trading when you're on sim and live, and you find that you're second guessing your rules, you're kind of doubting whether it's a good setup, you're hesitating, that might be what's going on for you. But there's a few other ways that pressure can also affect you. So another one is this idea of ironic effects. So the very thing that you don't want to happen, your brain latches onto it and it makes it happen. So a really good example of this is if I just say to you, don't think of a white polar bear. Probably at least half the people out there now have a white polar bear walking around in their brains. So it's the exact same thing. When you're in the market and you're thinking, I need to stay in this trade, absolutely have to stay in it, hold the trade. I always get out too early, and you find yourself jumping out of it. And that's ironic effect. So pressure really exacerbates that and makes it kind of a much bigger problem. So while on sim, you might have no problem staying in the trade or however it manifests for you. When you're trading live and there's actually, money at stake, this can happen for you. And two other ways that it can impact. So you might resonate with one of these, maybe not all of them, or maybe you do resonate with all of them. But this is where your attentional focus actually narrows. So if your strategy involves you having to pay attention to lots of different signals in the market, you're watching all the different indicators. If you're feeling under pressure, your attentional focus can actually narrow so that you miss key indicators that and signals that you should be paying attention to. And of course, then this results in missed opportunities. So, or even maybe you're looking at the wrong time frames on the charts, something like that. So that's another example of pressure impacting your trading. And the last way that it can happen as well is, of many different ways, but this is a significant one, is that it can slow down the efficiency of your thinking. So when you need to act lightning fast and, be decisive and jump into setups when you see them appear, etc. Sometimes when you're feeling under pressure, that whole process of decision making in your brain actually slows down, and so you miss opportunities. So there are a couple of ways that pressure can impact your trading performance. And I'm not going to solve them today, but I just want to discuss why you might feel under pressure when you're trading. And so this really comes back to the idea of the significance that people place on their P&L and on the money that they're making or losing in the market. So money is neutral, it has no charge. It is just neutral. It's not out to get us. We are the people, and we put the meaning on money and we decide what it symbolizes for us. So often when people find that their performance is very different when they're trading live as opposed to trading on sim, it's because they're putting some very substantial weight on the P&L. And what does that mean? So that means that maybe, maybe the money that you're making symbolizes your self-worth to you. Maybe it's that you really have to care for a sick parent, and this money that you're making is what's going to make the difference in being able to get them the treatment that they need. Maybe it is that the money is to put your kids through private school. And so once you start attaching meaning and emotion to your P&L, that's where the pressure really mounts. And so in a way, if you want to actually kind of alleviate the pressure for yourself or try to perform better, there's two ways you can think about it. So one is about detaching the emotion that you have attached or the significance that you've given to the P&L. So trying to become really aware of what is it that it says to me when I lose money in the market or a trade goes against me. Am I actually saying to myself that now I'm a step further away from actually getting that mortgage that I wanted? So you have to become aware of what the actual nature of the pressure is for you. And then there's two ways that you can try and bring the pressure down so that you can perform better. So one is actually that you actively use strategies to bring your own sense of pressure down. So that can either be physically or mentally. So you either want to, reframe things so that you don't feel so under pressure, or actually you can use some like breathing techniques or relaxation techniques, even as you're sitting, at your trading station, to bring your physical sense of pressure and anxiety down. And that will actually free up your mind then to trade how you want to be trading. Another way to do it is to actually have strategies that help you to withstand the level of pressure that you feel under. And those things could be anything from using, self-talk strategies, maybe using visualization, so kind of mental imagery, you're imagining how you want the trade to go. Those kind of techniques that help you to really focus and basically buffer the effects of the pressure that you're under. So, little introduction to pressure. We're going to jump into it in a bit more detail next week, but just wanted to leave you with that. And so I thought, in order to make this practical for people, I just leave you with 2 questions to consider throughout the week on this topic. So the first one is, ask yourself, do I feel under pressure when I'm trading live? So is there a difference between your performance when you're trading live and trading sim? And then if so, what meaning or significance am I giving to my P&L?
Very important. And the other question I have is, how do I get this white polar bear out of my head?
You're
still stuck there. Yeah, I know you don't see the room that's going, the feed that's going through here, but about everybody in here was, oh my God, I can't get a polar bear out of my head now either. So that was a great illustration of it. But no, those are 2 very important questions, and we look forward to diving into this topic with you throughout the month. So thank you, Kreda. Welcome. We're really happy to have you here.
Thanks for having me, and talk soon.
Thank you. You're muted, brother. Carlos, you're muted.
There we go. Can you hear me now?
There you go. Yep.
Perfect. All right. Thank you, Kreda. That was amazing. Thank you so much. All right, guys, a big thumbs up over for Kreda. She'll be joining us every Monday and Wednesday, as Nora mentioned. So, all right, let's take a look at what we have on our list here this morning, starting with GM. GM is very active. I think it's worth taking a look at today, 1.3 million. So we definitely got quite a bit of volume there. MRK was good on Friday, and not really great. All the action happened really in the pre-market, right? We had this huge pop and then the drop here. If you look at where it opened up, right? In the intraday, didn't have a whole lot of movement. If you look at this here, right, didn't seem like it did. So here we have Tesla. I think Tesla is decent. We'll keep an eye on that one. Great volume right now. mRNA has a nice drop here, losing again. Just been on a down tear here for the last 2 weeks or so. Apple is a good indicator of what's going on with the tech sector. We'll keep an eye on that. And then we have AMC. I think they'll look pretty good. 1, 2, 3, 4, 5, 6. We'll do levels for all of this. I still want to get down to 4, but let's do levels for what we have right now. And just going to take a quick look on our secondary list, see if there's anything that might be worth looking at. Actually looks very good today. Baba is decent. Facebook, here we go. Facebook started to move now. Facebook now is definitely in play. Norm called it on this one, that catalyst could get some stuff going, and we're seeing that right now. So I'm gonna move Facebook up. MRK, guys, I know this thing is exciting. It popped up. It was like 60%. I forgot what it was. It was a crazy number. Not 60. That's exaggerating, but it was a good number, and it has some catalyst behind it. But I think I'd rather watch Facebook than this one today. We'll keep this as a possible. So I like Facebook this morning. We'll bring that up. And then the last one on our secondary list was BA. Not doing a whole lot. Facebook definitely deserves to be on our list. All right, let's start with GM this morning. Levels here, guys. We do have high is 55.91. We'll slam a level right on there towards the bottom of this. Price action right now sitting on a level. If you can see this right on, draw a line right across. You see some areas of resistance and support happening right at 54.62. So right on there, let's slam a level. You can see that right on there. Great support here. Love the change in direction. Great resistance. Could not get above this a couple of days here until it finally broke down. So that's a good area there. In the pre-market right now, you're seeing that. You're seeing the battle with this 54.66 level. So you want to keep that on deck there. Towards the bottom, guys, we do have at least 1 or 2 here. Right over here, guys, 54.19. I'm going to mark this one down. I think that's worth having there. Then towards the bottom, highs and lows from the last 2 trading days. Even your previous day close is all the way down here over at 52.74. All right, now towards the top, if we can get above this 55.91, in between here, again, pretty choppy daily, guys. In between here, you do have another level. A lot of days opening and closing right on there. This one, you got a couple right on here, about 3 or so, 2 more right on here. This 55.34 level does have a lot of touches. And again, we're seeing the action here in the pre-market, the back and forth between 54.62 and 55.34. So you want to have those 2 levels on deck. Above this 55.91, our pre-market high, we do have another great level here. Tons of touches here as well in 56.71. So here's GM. This is not probably the least of my favorite of this bunch, because we know they can trade very choppy, but today they got great volume. They're up 3%. That could be decent. Tesla is looking very good this morning. Towards the bottom, guys, of the price action, you're pretty much covered. Highs and lows of the last 2 trading days. We've been watching this kind of pegging or building into a point here where they have news today. So now they got the breakout. High of the pre-market sitting at 801. 802.50 to be exact. 802.50 is the high of our pre-market. And then right in here, I'm going to take the most recent high, which is 700, 800, right? That's going to play an important part. That number, that whole $800 target for Tesla is going to be important. You can see in the pre-market as well, you're seeing some resistance around that. Around that price action, that $800 mark. So I keep that on there. Now above the 802, if we decide to go back towards the high of the pre-market, let's head over to January, February timeframe. We do have a level right in here on the daily around 824. 824, plenty of support happening around that area. A couple of days opening, closing there, and some more resistance here. So 824 is a good one for Tesla if we do decide to be very strong this morning. mRNA getting crushed today, down another 5.3. I mean, they cannot buy a green day here. They've been going through a real rough patch. Low of the pre-market, 318.98, basically 319. And then towards the bottom, if we're to continue to lose these levels, let's zoom in here. We do have on the daily right over here 296. Again, that's a big push. I'm gonna take this one on here, this 306. Again, this level is not as great as this 296. Obviously, there's more support happening here, but you do have a day closing right on there, right? It's just one day. It's not a whole lot, but I want to have something in between here, because from the price action now over to 296, that's a big drop. I don't think we'll get there without trying to find some kind of support somewhere, and that 306 is the only thing I see on the daily. Right on there. Towards the top, guys, highs and lows from the last 2 trading days. Previous day close, you're pretty set there on mRNA. Here is Apple. Apple's dailies, again, just messy here. Right now, volume almost 1 million shares traded. I do want to keep an eye on this one. This could be more of a possible, though, I would think. 142.20, surrounded by the highs and lows of the last 2 trading days. Previous day close towards the top. I don't think we need to add anything else on Apple, guys. I do like this base of support we're building here over the last couple of days. We were really trying to stay above this. We dipped below this on Thursday. No, this was Friday, actually. Came right back up. So again, we're trying to stay above this 141. This morning we're down almost 0.5%. Let's see if we can get going towards the top side, or we're going to continue to slam against this 141. But I really think it's more of a possible. We'll see. Let's leave it on here for now. AMC, guys, could be very, very active. They got 870,000 shares traded. I'm going to remove some of these levels as they're overlapping our highs and lows from the last 2 trading days. I'm going to add one on here over at a high of the pre-market, 39.50. Towards the bottom, you got plenty. Previous day close, the low from Friday, the lows from Thursday. In here, I'm going to add this day. You got 2 days slamming up against 35.35, right? This one closing and this one opening at around that 35.35. So we'll keep that there. And then towards the top, you got plenty as well. So we'll see. Again, what I like about AMC is you're going to get the volume. Is the price action going to move one way or the other heavily? That is what we have to wait for the market open. So let's see what happens there. Facebook is definitely in play. Glad we looked at that. This is moving nicely now. Low of the pre-market right now, 363.40. Might not stay there, but we lost this nice level of support here, guys. We've been holding this for all last week, looks like. All last week trying to hold on this 338. We're slamming below that now. High of the pre-market sitting over at 341. We'll put a level there. Towards the top, I'm not going to add any more. We have plenty here, and we need a whole lot of power to get through the previous day close and some of these other highs and lows from the last 2 trading days. 336, we're getting a little bit of a bounce of the previous, of the low of the pre-market. Heading over to the left here, guys, we do have June, July, big months for for Facebook around this price range that is at now. So if we look at this here, this is level 334, below that 336. Great area of support. We come right to it, then we bounce right back from that. And here, I'm going to mark this down. This is an amazing level of support. Was prior resistance right around here and then became support here. So we're going to definitely want to have that level on deck. It's 329. Again, it's a bit of a drop for Facebook. I don't think we'll get there, but we're ready. If this thing does get through some of these levels up here, that 329 is a great area of support and resistance. So all right, that is what we have, guys. Let's take a look at our moderators lineup, see what we have going on here. I'm going to resize this a bit, and we'll bring this over. So we'll disable this video here, and let's bring this over here. Let's see what we got. Okay, here we go. As I'm doing this, guys, please make sure you hit that thumbs up over on YouTube if you're enjoying the pre-market show. We go live every Monday to Thursday at 8 a.m. and Fridays at 8:30, starting with engineering the markets, then continue with Norm and I for the pre-market prep. We get together our watch list as we are doing now. Here is Simon. He's coming in with POTR, Apple, QS, and American Airlines. John is looking at Tesla, MRK. No SPACs or IPOs for today, typical Monday stuff. Peter's list, AMD, Tesla, MRK. Secondary list, Apple, AMPY, and CCL. Dima's looking at Apple, MRK, and also CCL. Eamon, PLRT, Apple, QS, potential shorts, Uber, MA, and also maybe Disney. Tiffany likes Tesla, MRK, and MRK, also mRNA and Oxy. Thor is looking at Apple, SPY, Facebook, GM, mRNA, and MRK. Mike is looking at Tesla and Facebook and some of the airlines this morning. Brian coming in with Oxy, CCL, LUV, mRNA, BTU, and also Zine, which is a low flow. Not a low flow. They're sitting at I think it's 35 million. We'll take a look at it in a second. Jared, his list, mRNA, Facebook, BA, Tesla, and NEO for today. So that is the moderators lineup for this morning, guys. Looking pretty good right now. XENE is sitting at 34 million, I believe. But I have them down here, 37. I have them down here, my risky pile, because again, these guys can really move. You got to be very careful with your number of shares on that one. So all right, I think we're pretty much set, guys. Over on YouTube, we're going to be transitioning over to the room as we continue our live trading. I believe Brian and maybe Thor, if Andrew cannot get on. He had issues last week with his system, but he was able to trading to announce some stuff. So maybe he's able to get on today, but we'll be transitioning to our live trading. Thank you so much over on YouTube for joining us, guys. We really appreciate it. We do have a promotion. You can try us out for a week. You can try the room and see if this is the right community for you. We do have an onboarding class tonight at 8 p.m. Eastern time with myself, Mike, and the rest of the team there. Jared, John and Kyle usually join. And after that tonight, technology class with Kyle at 9 p.m. Eastern time, which are amazing. So guys, thank you so much for joining us. Appreciate you very much. We'll be live again tomorrow to go over our watch list once again. And have a safe trading to start the week and to continue the start of this month, guys. Take care and trade safe.